Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys. In the second video today we will take a look at the Canadian dollar, mostly because in the gold market we do not see something really new. The major issues we have discussed yesterday in the video, what to watch for in the gold market, what we expect, what the next target is, and so on. But on the Canadian dollar, guys, currently, as you see, probably the solid pullback on the crude oil. On the currency, on the Canadian dollar, that, as you know, has really big relation to crude oil prices, also is forming the very cool setup that stands in the weekly chart. It means that it could provide us the chance for trading for the considerable period. So it could be a few weeks while we will get the clear direction and where we will be watching for important targets. So take a look actually what is going on here on the weekly. Market finally has hit our target. So if you remember what we have talked about in the Canadian dollar a few months ago, we talked about the relation to the crude oil and what to see here. We discussed this A, B, C bottom pattern as well. So currently, with the drop of the crude oil, market has hit the XOP target. As you can see, this XOP has been completed. This XOP creates the agreement with the major fib level and 618 resistance of the whole downward action on the weekly chart. And take a look. This level is accompanied with the weekly overbought. So it's rather strong resistance, guys, that should lead to significant consequences. At least, market should show at least the 30% retracement here, but this retracement even could be stronger, potentially. So, existence of the fib level and overbought creates the stretch, Jordan-Napoli directional stretch pattern. The stretch has the target that stands between the bands of the oscillator predictor. So that shows the overbought and the result. So actually the target of the stretch is the moment where the trended oscillator shows the overbought and result reach the equilibrium, the zero area. So I will show. So actually this is the same. This is a derivative indicator from the trended oscillator. So you will see it. You can see when the market hits the overbought, the trended oscillator hits the top. So, and the target of this stretch pattern is when the oscillator hits the area around zero. So it's almost there, but still not yet. It means that by dealing with the stretch pattern, we could suggest a bit deeper downward action. It's not necessary market will stop here, but it just confirms that market should proceed slightly lower, and that's very important for us. Why? Because the major trend that we will be trade that we will be watching for here, this will be Brent by the buy. So take a look. Actually, this recent thrust top is suitable for Jordan-Napoli double repo or a Brent bottom, and if, as we have suggested, market will drop slightly lower, it will hit the major support area and will close below the 3x3. That will be the setup for Brent bottom trade, which should push market higher. This will be significant pullback here. So on daily it will be really big distance because now we're talking about the weekly chart. Now, when you turn to the daily chart, you'll see here, by the way, the area that market should hit is 33.26. This is the 30% support of the whole thrust of the weekly chart. That's where Brent bottom potentially could start. So we will see what will happen here, and then how market will hit it, in what manner and what price shape will be. But theoretically, that's the first level where the market could start to form the Brent bottom buy, and where its upward pullback could start. Meantime, as you can see, the market reached the daily average sold, and it means that it should take pause in the downward action and should show deep retracement. Why? Because, guys, this is actually very strong and long-term upward action. And we have the bullish momentum here. It's rather strong. And this is first collapse, first sell-off after this long-term bullish trend. And it means that the momentum that exists, impulse that exists in the market should push price higher and show the deep retracement. Also, here definitely will be some fib levels, so you could choose any reaction point that we have here, and you will get the 30% resistance here. This level, guys, also will be the confidence support, because if we'll take fib levels either from these lows or from that lows, you will get the 618 around this area. So here we also could get the daily bullish stretch, which suggests pullback here as well. As you understand, this is open really wide horizon for trades of different kinds for different traders. So if you trade on daily, that will be your bullish setup. You could try and take the short-term bullish position on the pullback. If you trade on the weekly or intraday charts and you're dealing with this downward action and you expect the dropping lower, as we have suggested on the weekly, you could watch for pullback here. For example, on the hourly chart, you could wait for a pullback to some level. Maybe Gartner's triple to sell will be formed, maybe hand and shoulders will be formed, some kind of upward action will happen. So anyway, you are watching for retracement, for taking the short position here with anticipation further drop right to the 30% support, where then you could turn to the weekly chart and trade the bread and butter in the opposite direction. So when you know the direction, that based on the strong important patterns on the weekly chart, this is much easier to plan your trades, because you approximately could suggest what the price action will be. And here we suggest that this will be somewhere of that sort. Upside pullback here, then it should be this kind of the downward action back to the 30%. Maybe it will be kind of the ABCD or something of that sort. As soon as it will be reached, and if bread and butter will start from this area, we expect strong pullback here to the 618 resistance. Approximately something on that sort we expect. Of course, it could be adjusted. Maybe something will change. Maybe bread and butter will start a bit lower or something of that sort. But in general, the construction should be something of that sort. So now, as market is coming to the fib support and daily average sold, it's not time to go short. Scalp traders could drop your time frame to the 30-minute chart, hourly chart, watch for a bullish reversal patterns, trying to take the long position with a significant pullback, because actually we have the daily bullish stretch pattern. Bearish traders should wait when the retracement will be over, watch for fib levels, watch for bearish continuation patterns. And then here you could think about taking a short position in the continuation down to this area. That's first few trades that you could think about until we're waiting for a bread and butter on the weekly chart will start on the Canadian dollar.